Hello traders, today I'm going to show you a little bit of the Trade Scalper. I'm going to show you how to manually trade the Trade Scalper program, the signals. As you can see, long and short already on the chart, that's the Trade Scalper. And I'm also going to show you the autopilot. That doorbell sound that you heard is an alert function. The alert sound, whenever there's a signal for the Trade Scalper, it sounds an alert. So that's what you're hearing in the background, an audible alert for the signal to buy. At this point, it's a buy 41 quarter. Now, before we begin, remember that trading is risky. Please don't trade with funds you cannot afford to lose. There are risks involved with trading. So when you look at trading a method like the Trade Scalper, you have to incorporate an actual entry. So the signals are the entries to go as a buyer or as a seller into the market. Typically, we teach this method on a 1-minute chart. I happen to have a 1,000-tick chart. You can also use a range chart. Now, the market's been a little bit slower, so a range chart is actually good to enter into the market using the Trade Scalper. But if the market's too fast, a range chart just runs too fast. It runs away from you. So I don't recommend a range chart when the market is fast or very strong, volatile. But when the market's slow, like we've seen here, a range chart is fine. I happen to have a 1,000-tick chart because that's also what I use when I'm automatically trading using the autopilot. So that's why I'm using a 1,000-tick chart. And the thing with the Trade Scalper is that it's based off of price action. So it does not incorporate any moving averages. It doesn't incorporate any MACD, any stochastics, any momentum, any crossovers. There's no bands, there's no Keltner, there's nothing. Actually, it's all based off of price action. And I think that's actually a benefit, a positive thing. So I'm going to enter here long at this 41 quarter. That's the entry to go long. Obviously, I didn't get 41 quarter because I entered a little bit late here as I'm explaining the signal. And if you look down, the way that we manage the trades, most of the methods, except for the autopilot, is we're looking at the current conditions. Especially when scalping, you want to be in and you want to be out fairly quickly, and you want to base that off of the current conditions. So if the target happens to be 1 point, 2 points, 5 points, it should be relevant to the current conditions at the time that you entered into the trade. So if you look down at that yellow squiggly line there, it says 1 point, that's the ATR. The average true range of the last 4 candles is indicating that we're looking at a good movement of about a point. And so that's a good starting point. A 1 point, 2 point target, I think, is a good starting point. All right, now, how long do we usually stay in these trades? That is a great question. That's a question I get a lot, and it's actually something that we teach. Now, if you enter, in this case, long, we want to see an immediate target or an immediate move in our favor. The longer it takes for this to not hit the target or actually go against us, the worse off it is. So I have implemented, and we teach what's called a time-based stop. Some type of time element that says we are only giving this trade X amount of candles or X amount of time or X amount of bars to stay in the trade in order for it to work. If it's going to work, it should happen sooner rather than later. So it's always something good to keep in mind as a price action trader. Even if you're creating your own methodologies as a trader, don't hold on to a position if it's not moving in your favor. If it's going flat, if it's flip-flopping, if it's going against you, it's always best to limit the amount of time that you're in a position that's losing or it's not going in your favor. The other thing I like to do is I like to keep the stop where it is unless you're trailing a stop. Now, a lot of traders do their own type of trailing stop methodology. I have a trailing stop methodology where you use multiples of 2, 4, 6, 8. So you can trail a stop, but in this example, I'm only getting in and getting out. I'm all in, all out in this particular example. I'm not trailing a stop. I just want to hit the target, and then I want to move on. The other thing you should understand is that there is a difference between a limit order and a market if touched order. A limit order, it touches your trade or it touches your price or it touches your exit, and it's not always the case that you get filled. So a limit order, the definition is I want this exact price or better or nothing. So in this case, you can see that it hit the 41.43, the target that I have there, and it didn't get filled. And the reason being is because there weren't enough contracts
Target filled.
to justify getting filled in the order queue. There's an order queue when it comes to futures trading. Now, if it goes through the price, then everybody at that price got filled. So you can see it went through the price by a tick. My target was 41.43. It went to 41.43 and a quarter. So it went through the price, which means that everybody at that price got filled. So just be careful when you're using a limit order. The only other way that you could mitigate that would be using an MIT or a market if touched. The market if touched order says when that price is touched, convert it into a market order. So you have that option in NinjaTrader and some trading platforms as well. They offer MIT, which is a reference to market if touched order. In this example, I'm using a limit order. Now, to review the last few trades here on the Trade Scalper, you can see at about 11:30 there was a short signal. It's actually two short signals there. One is a double wick, and one is the main signal. Followed by the long at 41.3850, also good. The third trade here, 41.4075, also successful. And then we have the short and the most recent one, the long. So all of these signals here on the Trade Scalper, the last 6 trades here were actually winning trades. Now, it's not always going to be this way. I just want to show you an example of using price action. Most of the time, you're able to see what's happening, anticipate what's happening, manage the trade, and it's all based on price action. It is not based off of a conventional indicator, which a lot of traders are using the conventional indicators, and there's a lot of subjectivity to this. With the Trade Scalper, we try to be as objective as possible. The order to go long has a reason why we're going long. We manage the trade, we have targets, we have stops, and then we exit the trade. Now, based on price action, this can be traded on virtually any market. So if you're looking at currencies or stocks or NASDAQ or the E-mini S&P or the micros, it works. Some markets are definitely better than others, so I would definitely do your little bit of testing. You wouldn't want to trade lumber or rice, those kind of markets, or Mexican peso. Obviously, it's not really a lot of movement in those markets. I would avoid using those markets to scalp trade, right? They're more of a position or a swing trading market. Now, if you're interested in the Trade Scalper program, we offer it as a 6-month license as well as a lifetime license. We have live training that's included. You actually get to learn the method as well. So it's important that you understand what you're doing before jumping in. If you don't already have NinjaTrader, you can visit DayTradeToWin.com and get a free member account. So the free member account allows you to learn how to day trade using the charting platform. You get a free indicator to get you started. It's really something to get you in the door and learn about the world of day trading. If you have any questions, visit DayTradeToWin.com. Until next time. If you're new to day trading and want to learn more on the benefits of trading the markets, visit DayTradeToWin.com, join the next mentorship class starting later this month, and subscribe to the Day Trade to Win YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.